Good morning, everybody, or good afternoon, or good evening, depending on where you are on the planet. But this is related more to us Australians at present in relation to the Melbourne property market and maybe our other markets that are in states in Australia. There is a lot of media speculation that the market's going to shit itself and that it's going to go into a recessionary status. And that's based upon what we're seeing at the moment with auction results falling dramatically from 80, 70% down into the 50s and most likely realistically below, because I don't believe that all the real estate agents are releasing all the figures and their failures to the media. So the medias might report a 50% sale rate, but the sale rate really might even be around 35, 40%. So, when you have a look at the amount of auctions that were in Melbourne on the weekend, I'm not exactly sure, but I think about a good 20 to 25% of them weren't reported at the end. So therefore, the figures that we're getting are really falsified again. Now, so from that point of view, sometimes they do that because they still might be in negotiation. Some vendors don't want anything to be reported because they're private. Some agents don't want to report it because they don't want anyone to know of their failures, etc. I get all that. But one thing that I do remember really clearly is that in my time going back in the late 90s, early 2000s, what was happening is to get auction clearance rates between 35 and 50% was pretty much the norm. We had to work a lot harder than what agents have done in the last 5 years, especially here in Melbourne. What that means to me is this, is that we're in a market that's going to provide some opportunity. And you may have heard a lot of this spiel beforehand. But in reality, bank finance is tougher. We get that. The Royal Commission's made it tougher, but that will only help us in the long term by having a regulatory system that is better. So it may take a year or so for it to settle, but it will be better for the financiers and much better for us, the users of finance, in the long term, because it safeguards the market. The second thing that I would say to you is that there are opportunities. Some people say you need to wait to buy next year because the market will be less. That may be right, but depending on what your purpose for purchase is, whether it's for a home, whether it's for investment, whether it's for development, etc., you analyse the property itself at the time. And there are good buying opportunities now. Open inspection numbers are down. Auction attendance numbers are down. The amount of live bids have regressed greatly. So I think it's a fairly good time. So for you prudent people, a good position is a good position in a bad or good market. That's it. It's really, really simple. So a good buy is a good buy depending on the type of market that you're in when you buy. Now, so if you're now looking around to purchase, my suggestion to you is to know this, is that yes, auction clearance rates are low. That doesn't necessarily always determine the market. There are people predicting a lot of market fall and large percentage numbers, 20, 30, 40% fall. I don't know how they do that. I've been in it 30 plus years and I find it very hard to predict. But I do know that a lot of asset value on shares, etc., are well overmarked. They seem to be sorting themselves out. So when the stock market's dropped 10% in the last week or so here in Australia, I see value in that and I see opportunities. So what I say to you is don't be over optimistic, because optimism and stupidity can be twin brothers. Sometimes you can't tell the difference. But what I do say to you is look at everything with a clear glass and a clear mind. Have a look at things and say, where is the value? Do I see value in this particular product right now, today? And you have to do some predictionary work and say, in 3 months' time when I go to settle it, will it still be worth that sort of value that I'm paying now? So my goal as an investor is to pay the value that I think the product will be in 3 to 6 months' time, not today. And that's generally what I've always done. I try and advance look at where I think the value will be. And if I think the value is going to be less than what they're asking for today, I will offer the value of what I think it'll be worth in 3 or 6 months' time. That's my major tip. That's how I've always bought in any market, and that's what I strongly suggest to you guys to do. So whether you're buying overseas or here, that would be the major tip that I'd give you. I thank you very much for listening to me. I appreciate everyone watching. God bless. Stay great.